Associates with your morning flash update for this Thursday, the 17th of September, 2020, about 9:25 a.m. Central Time. Well, we woke up today. The first thing we saw was the Bank of Japan left all of its monetary policy as is, but they are expecting growth in their economy now. The Bank of England held tight as well, and the question there, of course, is are they going to have to add more stimulus to the economy, just the opposite side, because of Brexit and other issues that are hanging over the market, so we'll see. In England, they're also wondering just how bad the situation is going to be in the House of Lords, because while Mr. Johnson had to give up a little bit in the House of Commons to get his bill passed onto the House of Lords has taken a very, very strict look at this. They don't like the idea that the government says one thing and then reneges on it. And that's basically what this bill does to a certain degree. Then we have to look at the day's economic data. But before we do that, remember what I teach you. The one thing that happens when our Fed comes out and makes a statement, as they do in the monetary policy at 1 in the afternoon, and then the press conference goes and begins at 1:30, ends typically around 2:30. By that time, Asia's already closed most of their business. Europe is obviously, if you think of the time, their markets are closed. That's a 6-7 hour difference. So the market has to refocus it. Early on this morning, you were down in the stock market from here a lot lower, almost 500 points lower. You've come back 30 points. You were down nearly 70 points in the S&P and the NASDAQ. A lot of volatility. Metal markets got hit very hard. Look at silver, for example. Silver just bounced back 64 cents. It was down just about $1. Why? Because the Fed is saying there's no inflation in the economy. That's the thing you've got to be looking at. Their own projections don't give you anything until 2023 in terms of that. Now, this can all change, obviously, if there is a COVID vaccine. At the very earliest, many of the doctors are saying you will not see anything until the spring or summer of next year. The president says it's right around the corner, and it could be October. I'll let you guess what it is. I have my own, opinions of it. In the meantime, the dollar and the euro are fighting for direction right now, because the big question is, many traders think it's Japan, Asia, if you will, that you want to be invested in stocks, and Europe there's a better chance of opportunity that those markets will take the leadership away from U.S. Grain's still up today. Bonds and notes, well, now that the Fed is out of the way and the Fed is saying no, there's no reason to raise interest rates for the time being. How do you get bearish on those markets? That becomes the question, of course. And on the energies, we're still getting a good bounce today off of the rallies that began the other day. But again, we're getting up in the Brent towards that area where it keeps failing in that $43 area. As I said, there was a lot of economic data, the Philly Fed business activity. I consider this a beat just about every single place. I like that the inventories index falling. They're drawing out things, and yet shipments are up very big. You can see new orders flying out the door. That's all good. Then we get to the housing starts, and this is a complete flip-flop. The analyst had this wrong. You're up in the housing starts 5%. They expected a 3% decline, and in the permits, you're almost down a full percentage point, and they expected it up 3%. That doesn't make sense. As for the jobless claims, you're down 33,000 to 860, and we've been hanging that 851, 860 level. And you might say, that's nice, it's stable. No, it isn't nice, and no, it's not good that it's stable there. You wanted to get back where you're not getting these type of numbers. You didn't have that prior to the 60s, if you think about it. I admit, we were near 7 million jobs in March, okay? But this is still a big number, and that weighs on this market, and it shows that nothing is really back to normal. But let me tell you what is going on. The big success that has been happening at the CME group is their micro stock indices. If you look at the daily volume, it's literally blown away. This is what's going on. Instead of trying to trade these markets, take on the full risk, you can build positions with a 1/10 the size contract. 1/10 the size. And to me, that is where the trade is moving because the volatility is so big. Example, today, you were down 500 points in the Dow. Then you come rallying back and you're now down 200 points. Well, instead of sitting there with these $50 a point, you're at $5 a point. So you can handle risk a little bit easier. That is what the average person is looking at. As this market, and it has matured, it trades just about tick for tick with the market. We charge $1 a side for the trade. Not a bad deal at all. So if you'd like to find out more, just go to our website, iraepstein.com micro. You can call my staff. They'll get you started with it. It's pretty easy. It's all electronic, and away you go. If you can't beat the market at $1 a side, what can I tell you? I'm Ira Epstein. You have a great day, and I will see you all tomorrow.